It is 10 minutes past 10 on Thursday, the 7th of May, and we are currently 4 days from the Bitcoin halvening event. It's a very interesting subject. We get all sorts of speculation on what is going to happen. And on today's market broadcast, I brought on exactly the man who will tell us all about it and what is misunderstood about it and what's really going to happen on Tuesday morning. I think I think we're currently on track for 3 in the morning on Tuesday morning. Oh, in fact, no, actually 1:45 on Tuesday morning. Anyway, Sam Volkering, who is the editor of Revolutionary Tech Investor, joins me on today's market broadcast. Sam, thank you very much for joining me.
Good morning, everybody.
Right now, Sam, in terms of the halvening event, just before we went live with this call, you were saying how you've encountered quite a few people who believe that when the halvening occurs, effectively it's just the total number of Bitcoin in circulation half of them will just be deleted, or perhaps they'll go into Satoshi Nakamoto's personal account or something. But of course, this isn't exactly what happens, is it?
No, that's not the actuality of what we're going to see on Tuesday. And I think it's important, and what I really want to cover off today for people listening is that what is about to happen, as opposed to what people think is going to happen, the misinformation out there. The good news is that with Bitcoin, it's actually quite simple and quite clear because it's all coded. It's all there in Bitcoin's code. So we know what's going to happen with absolute certainty, which, considering the state of the legacy financial system, having some sort of certainty in a monetary system that Bitcoin is really become and is continuing to expand as, it's quite a change from what we are seeing at the moment in the legacy system that they're all using. So let me start off, I guess, to understand what's actually going to happen on Tuesday. You got to have a little bit of a historic understanding of Bitcoin itself. So Bitcoin by nature is digital. So it's been coded, programmed with a code, and that is effectively what mandates what happens with the system, with its network, with its peer-to-peer network. The original design for Bitcoin was as a medium of exchange online. In the Satoshi Nakamoto's white paper, that's really the crux of what this is about, and the enabling of transferring wealth or exchanging wealth with other peers on a global network without border. Okay. With that said, in the Genesis block of Bitcoin, so the very first block, the very first set of transactions, the very, very, very first block of Bitcoin's blockchain, which went live all the way back on the 3rd of January 2009. So within that Genesis block, the raw data that exists to create that block, the programming code that makes that block, there's an extra piece of data in there. Now, some people may know what this extra piece of data says, but if you don't, it says the times 03/Jan/2009, Chancellor on brink of second bailout for banks. So on the 3rd of January 2009, when Bitcoin's blockchain went live with this Genesis block, the headline of the Times newspaper on that day was that Chancellor on brink of second bailout for banks. So Bitcoin was built, formulated during the 2008 and sort of early parts of 2009 crisis. And so when it went live, it was very much a statement of intent, the philosophical core of Bitcoin, that this was a network, a system that would exist online and as an alternative to the legacy financial system that at that time was crumbling around us, and as we're seeing today, continues to crumble around us. So that philosophical core is important to what we're going to be talking about with a special event that I'm going live with on Monday. But at the very, very basics, back then, the very first block in Bitcoin's blockchain really made a very clear statement about what it is designed to do as the antithesis to the legacy system that we currently have. Now, that's kind of the starting point. Within Bitcoin's core programming, there's some code in its code base that states that every 210,000 blocks on the Bitcoin blockchain, the block reward will halve. Now, what that means is that when blocks get added to the Bitcoin blockchain, miners solve a complex mathematical problem that verifies transactions, helps secure the network in general, and then adds blocks to the blockchain. So it's a ledger. It's like a big giant textbook where you paper ledger where you just fill in all records of all transactions that ever occur.
Each block is effectively another page of transactions, effectively, right?
Yeah, correct. And so in adding blocks to the blockchain, there has to be some kind of incentive for the miners, for the peers on the network to continue to contribute and be a part of the network, to verify blocks, to add blocks to the network. So because when you mine Bitcoin, there's a cost. There's a energy cost, there's a time cost, there's a hardware cost. And so you have to provide some kind of economic incentive in the network in order for the network to continue to be secured, validated, and to maintain, I guess, its ongoing nature. That economic incentive is what's called the block reward. So for every block that a miner mines and gets added to the blockchain, they are given a Bitcoin block reward. Now, in the early days, like back at the very first Genesis block, and for the very first 210,000 blocks in Bitcoin's blockchain, that block reward was 50 Bitcoin. But in Bitcoin's code, it states that every 210,000 blocks, that block reward will halve. So at block 210,000, which was back in 2012, the first Bitcoin block halving took place. So at block 210,001, the block reward went from 50 Bitcoin to 25. And then for the next 210,000 blocks, so up to block 420,000, the block reward for each block added to the Bitcoin blockchain was 25. And so miners would get 25 Bitcoin as the economic incentive and reward for verifying and adding blocks to the blockchain. Then in 2016, after the next 210,000 blocks, so at block 420,000, the Bitcoin reward halving, block reward halving happened again. And so the economic incentive, the block reward, went from 25 to 12.5. And so here we are now, another 210,000 blocks later. So we're coming up to block 630,000 in Bitcoin's blockchain. And at that point, the block reward is going to halve again. And that is going to happen on Tuesday at about 2 a.m., give or take, in the morning. So again, what's going to happen is the economic incentive for miners is going to halve. So the block reward will go from 12.5 Bitcoin to 6.25 Bitcoin for every block that's added. And then what that means is that for the next 210,000 blocks, so from block 630,000 to block 840,000, for every block added to Bitcoin's blockchain, the reward will be 6.25 Bitcoin. And then it's going to happen again. And every 210,000 blocks, the block reward will continue to halve. And that's going to happen until all Bitcoin are mined. And as we know, there's a cap on the amount of Bitcoin that will ever be in existence of 21 million Bitcoin. And that is sort of roughly based on the amount of time it takes for each block, the average time it takes for each block to be mined and added to the Bitcoin blockchain. We know that roughly all Bitcoin will end up being mined by about the year 2140. So we've got about another 120 years before all Bitcoin will be in existence and there'll be no more Bitcoin added to the system. But what we do know is that the ongoing supply on Tuesday is about to be cut in half. That doesn't mean all Bitcoin, half of them are just going to disappear. It just means that for every block, the reward paid as economic incentive to miners will be cut in half.
I think it's a I think that's a very good introduction to the dynamic. It's interesting, and I think it's worth stressing that nobody actually knows exactly when the halvening is going to take place, because there is no actual time limit on this. There's no time. This was never written into the code that it needs to be. We need to pass a certain amount of time. It just means that every 210,000 blocks must be mined. So it really depends on people actually using the network and sending transactions across it, transactions which must be put into blocks, that there will be any halvening at all. So, if nobody wanted to send anything across the network, there wouldn't be any blocks added to the blockchain. So there wouldn't be a halvening. So
yes, sort of.
Yeah, well, go on.
In sense, so the other thing that's important to understand is because this roughly happens every 4 years, another aspect of Bitcoin's code that doesn't change is the way that the difficulty adjustment happens. So again, back in the very early, initial stages and design and creation of Bitcoin's code, it set a block target. So that block target is 10 minutes. So it dictates that every block on average in the Bitcoin blockchain should take 10 minutes to mine. And every 2016 blocks, that difficulty adjustment will change. So it's dynamic. What that means is that when you add a block to the blockchain, miners have to solve quite a complex mathematical algorithm in order to mine the block and add it to the blockchain. Now, if miners have the equipment and the hash rate, the power to solve that mathematical algorithm very fast, then the difficulty adjustment will become harder to try and reach that 10-minute target figure. So if, let's say, the average block speed gets to like 9 minutes and 30 seconds, the difficulty adjustment will then become harder after 2016 blocks, so that target of 10 minutes gets closer. And then if it takes, say, 11 minutes to mine on average a block, which is above that 10-minute target number, then the difficulty adjustment will reduce to make it easier for miners to solve, again, to try and balance out to get that 10-minute target rate. Now, it fluctuates. It's never really perfectly 10 minutes on average, but for those 2016 blocks before each difficulty adjustment. But what we do find is that when it's below or above, it adjusts and effectively balances out to try and get that target. So while there's not necessarily a set time for each halving to occur, we do roughly know that when you look at 10-minute blocks, we kind of pretty much know that in about 4 years, give or take, each halving is going to happen.
It's interesting when you everyone likes to project forward the existing amount of Bitcoin mining we've had and the halvenings that have taken place, and like you said, I think 2,140 is when the projected final Bitcoin will ever be mined. And of course, during that period, I mean, it's kind of hard to imagine what computing could be like in the next 10 years rather than 2,140. And so one of the reasons why we don't know when the halvening exactly is going to take place is because of how competitive the mining space is really going to be by Tuesday morning. So until relatively recently, I was thinking it was going to be 3 a.m, and then I checked this morning, and it's actually going to be 1:45. And it all depends on just how many blocks get added, and how many blocks get mined by the miners during that time. And if it becomes very, very competitive, they could really bring that time forward by a lot more, by much more. In theory, we could have maybe even Tuesday afternoon as a time when the halvening could take place. If for some reason all of the miners start really pedal to the metal and trying to get as much money as they can in the meantime. What's your take on sort of the advance of computing, how that makes mining more competitive, which could, in theory, bring forward a lot of these halvening dates?
Yeah, I mean, like it depends on the difficulty adjustment and when that falls. I mean, so if the difficulty adjustment was scheduled to take place on Sunday as opposed to the 5th of May, so what's that, just a few days ago, then and all of a sudden there was this crazy increase in hash rate and ability to bring the block block speed down to 9 minutes or something like that, the difficulty adjustment would increase to a point that would make the blocks that come after on for the rest of Sunday and into Monday significantly harder, so that that time frame would be pushed out. So it's a dynamic adjustment and that's why the difficulty adjustment takes place over such a shorter period of blocks added to the blockchain. So, you could bring in a whole bunch of extra hash rate and power to try and add blocks to the blockchain, but because of the dynamic ability of the difficulty adjustment, that doesn't necessarily happen. That the next halving will be 2 years instead of 4. It's just not the design of how the code works. Now, that's not to say that something like quantum computing might commercially be viable in a way that comes along and really disrupts that in a significant way. And we don't know if the difficulty adjustment can then make the requisite adjustments to combat something like quantum computing. But there's the other thing about Bitcoin and cryptocurrencies in general is that these are problems that are not unnoticed. There is already ongoing work and development on different algorithms that can be used or utilized to effectively negate the future force or potential of something like quantum computing. And I think that's a takeaway that people really should understand as well here, is that while we are going to see incrementally faster computing power, and then with quantum computing, quite likely exponential increases in computing power, that is going to completely change how we look at networks and things like cryptocurrencies and peer-to-peer networks like that, blockchains, all those sorts of things that we talk about. But these are problems. There are solutions being created to these problems already in anticipation of that happening. So, people do, often write in and say to me, what's going to happen with quantum computing? People say it could break Bitcoin and it can, disrupt it and destroy all cryptocurrencies. It's like, well, theoretically, yes, but theoretically, if it's going to do that to something like Bitcoin, then it's, I would be more concerned about my internet banking login with the legacy system than I would be with Bitcoin, where I know that there's development and innovation happening to already fight and combat something like quantum computing and integrate it into these cryptocurrency networks, as opposed to, your Lloyd's or your Barclays account, where, who knows what they're doing in regards to quantum computing and the ability to crack into the legacy system. So people have to temper, these sorts of ideas that are sort of purported in the mainstream media, and really understand the fundamental basics of the construction of cryptocurrencies like Bitcoin and the networks, the fact that they can be developed and innovated, not necessarily at the core, but you can add application layers on top of it, because we are talking about, a digital, what is effectively a digital currency or a digital system. So, it's exciting in the way that you can do so much with cryptocurrencies and Bitcoin and improve on them in a way that you just can't do with a legacy system.
In the if the quantum genie is out of the bottle, I do think that crypto would probably be the least of anyone's problems, considering the much richer rewards that are to be found in directing it towards major companies,
absolutely,
banking system. If you had this divine bazooka, would you really want to point it at something that is considered is still considered this alternative niche sort of crackpot investment asset that is crypto?
Wall Street.
Yeah, exactly. I was interested to see, I think it was a few years ago, you probably saw the headline about those Russian computer fellows at one of these, I think it was a large Russian university. They were in charge of a supercomputer, a really strong sort of research institute facility, and they'd been arrested and sent to jail for directing this this state asset towards Bitcoin mining. They'd been rumbled, and I think they'd been running the computer overnight in order to earn themselves a bit of Bitcoin. But of course they got caught with it, and they didn't get away with it. In terms of what the halvening is going to mean in the shorter term for Bitcoin and the like, what do you think is actually going to happen at the time? So of course we've seen quite a strong run up to it in anticipation of the halvening, just as we saw in say 2016. I remember that time quite interestingly, because it was around the same time as the Brexit referendum. There was the Chilcot report as well. There was Hillary Clinton's email server investigation from the FBI. It was all sorts of interesting political stuff going on at the time. And then, behind it all, the halvening was going to occur, and you had, everybody in the crypto space is all psyched up for it. And now, there's even more awareness for it. Yeah. So today's Captain Conflict, I posted a couple of the Google Trends charts. I've seen that you've done it in your editorial as what? It's like searches for coronavirus or something, except people are just searching for halving. It's this vertical line up. What do you think is going to happen? Do you think this is a sort of it could be a buy the rumor, sell the news thing in the short term, where you get this sort of big run up in anticipation, and then afterwards people sort of lose their interest somewhat. But what do you think it's going to look like?
Yeah, it's funny you mentioned the Google Trends thing. The interest compared to 2016 is, I think it's a multitude of about 4 times higher when you look at the Google Trends charts compared to 2016, which says something about the general awareness and I think realization of Bitcoin in sort of, the mass market and the general public. It also says something about the current state of the legacy financial system as well. And I think that particularly this year with what's going on with economies around the world in reaction to the coronavirus, when you look at the economics, the influence and impact that's being put in place, you look at the US program of money printing and interjection into the financial system, same in the UK and other countries all over the world. People are genuinely concerned about the value of their money that they know, as they've known it for decades. They're worried about the value of their money going forward. And people are naturally then interested in alternatives to that and ways that, they can look at protecting wealth in other asset classes. And Bitcoin just happens to be one of those because it's around at the right time. Bitcoin wasn't in existence or any other cryptocurrency in 2008 and 2009. And this current financial situation has really been the first real litmus test for Bitcoin and cryptocurrencies. And as we've seen, they've somewhat passed with flying colors and done exactly what we expect them to do. Now, as for Tuesday with Bitcoin's halving now, kind of like you said, in 2016, there was, great interest in it. And off the back of that, we saw some pretty crazy things. And I think what people need to really understand is that from Monday to Tuesday to Wednesday, and so obviously the Bitcoin halving taking place, practically in the space of a day, nothing's going to change. But that's not really the story in play here, because what I like to think, and we say this because of, we look at the trends and patterns from what's happened over the last decade and a bit in Bitcoin and the cryptocurrency world. And we know, and everyone's smart enough to know that, no one has the crystal ball. So we don't know that these trends and patterns are going to occur in the same way in the next couple of years. But you can't ignore those patterns either. So I remember the first Bitcoin halving in 2012. And what we saw from 2012 at the first halving through to the second halving in 2016 was this immense, innovation and development explosion in cryptocurrencies. It wasn't, okay, yes, Bitcoin's value, increased significantly when you convert it into fiat currencies. But the real story that people don't really talk about between 2012 and 2016 is the explosion of other cryptocurrencies looking to build new networks, new solutions to problems of centralized, concentrated control systems that we see in the world today. So things like Stellar and Ripple came out of that period after the first halving from 2012 through 2016. Some of these cryptocurrency networks that have created immense value. They've created jobs. They've created an entire industry that didn't exist before. And people forget that cryptocurrency isn't just about a digital coin that's going to go up in fiat money values in pounds or in dollars. This is an industry. This is a revolution that's creating wealth. It's creating opportunities for people in terms of employment. It's building new networks, and it's expanding at a rate of knots that people do not really quite understand. And so we saw that during the first halving period from 2012 to 2016. But then we saw it again from 2016 to effectively Tuesday, is that while, yes, the fiat converted prices of many of these cryptocurrencies exploded, and they peaked and they troughed, and even after they troughed and a second crypto winter came along in 2018 and 2019, the development and innovation in the space, the creation of new cryptocurrencies, of new networks, of new solutions to these problems that we face in these legacy systems was rampant, and the flood of human capital and financial capital into the space was a magnitude higher than the first window from 2012 to 2016. And so what I'm saying is that I've not seen a slowdown in the development and innovation in this space, and that I anticipate that from the next halving, which will occur on Tuesday, through to the next one, which will come in 2024 roughly, we assume, that we're going to see again this explosion in development and innovation in cryptocurrencies, in new cryptocurrencies, in existing ones that will continue to innovate and develop and become more abundant and useful. I think we're going to see an explosion in that aspect of things, again, on a magnitude even higher than what we saw in the last window between 2016 and Tuesday. So, for me, that's exciting, because the acceleration of the potential of these distributed, decentralized networks is astronomical. We are talking about rebuilding entire legacy systems from centralized, concentrated control to these decentralized peer-to-peer networks. And that's not just financially. It covers everything from finance to communications networks, transport, logistics. We think about something like the Internet of Things and data and privacy and transmission and sharing and monetization of our own personal data. All of these sorts of things are what's coming now and has been coming over the last few years, and I think is going to then see an even bigger explosion during this next halving window. And I see the halving almost symbolically as that point in time that really kicks things off to the next level as people start to increase their awareness and understanding of these networks and how big an influence they can play in people's day-to-day lives. And so while, yes, we will, I anticipate again that we'll see, increases in value. We don't know for certain, but when you see these networks, you see the development, you see the progress, and you see the usefulness and utility that they have in the real world and the expanding network effect that they have, that is a value proposition in itself. And that, I think, is the real exciting story that people really need to concentrate on, and the opportunities within that will exist for investors to build wealth in what is effectively an internet app economy style wealth creation event.
So one thing I find quite interesting is the kind of, there's an interesting correlation if you put Bitcoin on an algorithmic chart. So you use that to just contain its really extraordinary rise, and then you chart it against in a linear chart against social media stocks. There's an incredibly tight correlation there between the likes of all your Facebooks and your Snapchats and the like. And Bitcoin in general. Just Bitcoin is operating at a it's just on steroids. It's moving much faster and much not much faster, but it's moving far greater to the upside and to the downside than the social media ones. And Charlie Morris, our colleague, likes to think of it as they're both leveraging the network effect in general. So the value of a network scales exponentially with the number of participants in it. And so if you have Facebook, if you double the number of users of Facebook, it's not the value of it doesn't double. It's a square. It goes up exponentially. And so if Bitcoin, if the usership of it still carries on growing, the value of it should scale accordingly. I find that quite a compelling story. And it's interesting with everybody in lockdown. So all these social media companies are they're getting eyeballs like they never have before. They're getting huge because people are just stuck home looking at their devices all the time. You would imagine that these all those social media companies are doing really well, and I wonder if there'll be a similar, this will create a similar sort of a similar tailwind to Bitcoin in general, simply because so many people are inside, they're using their computers all the time. As we've said, the Google search interest for an event like the halving or the halvening, depending on how you like to say it, has scaled up so much. It feels like there's an awful lot of speculation that's come onto the scene. I remember it was just late last year that TD Ameritrade made all of their trading commissionless. So they weren't charging anybody to buy and sell stuff. And you've just seen the trading in general of any trade, buy, sell, whatever, has just gone up at an extraordinary amount. And when everybody's in lockdown, and you don't have to pay anything to trade. People have been just buying and selling and trying to trade the stock market. I wonder if there's maybe a similar thing going on with the likes of Bitcoin. What do you think?
I have no doubt that there are people that are just looking to trade the short-term event around the halving. Like you said, we know for a fact that people have significantly increased their day trading in the stock markets. I know the regulator back in Australia just yesterday or the day before released a report warning of retail investors and their attempts to day trade and look into more risky assets like CFDs and leveraged instruments and things like that. Because, in the legacy system, people are forced into risk assets now because you get no return on your cash savings. Dividends have been slashed in this current crisis. And so all of a sudden, for a lot of investors, the only way to try and make some money out of the market is either to buy or to try and trade in and out of some of the volatility that exists. So, that's inherently more dangerous and more risky in the regular markets, the legacy system for people. And I have no doubt that that's flowing into cryptocurrencies as well. And that a lot of the recent volatility in that is on traders just trying to move in and out of positions in fiat money to make some money where they can, because again, they're forced into risk assets. But when you look to the bigger picture of cryptocurrencies and Bitcoin, you start to really get a picture that it's not just about Bitcoin and it's not just about the fiat converted prices of Bitcoin or other cryptocurrencies. It's a much greater disruption to legacy networks and systems that we're seeing in play. And that's mainly down to the fact that what I think we're going to see, and I spoke with some colleagues about this the other day, is that my view on it has always been and will continue to be that we're talking about a much greater revolution that's going to take time to play out, that's sadly going to be happening a lot longer than anyone listening or you and I are alive. And that's because for these sorts of systems like Bitcoin to truly get to the point of what they were intended to be, is that everywhere along a supply chain or a distribution channel, you need people to be willing to accept something like Bitcoin as the standard unit of exchange. So, if someone asked me the other day, the pizza that Laszlo bought in 2010, it's like worth a $50 million pizza today. I'm like, yeah, that's $50 million in US dollars, but it was, whatever was paid for that pizza, however many, I think it was like, 20 Bitcoin or whatever, 30, 50 Bitcoin, 100 Bitcoin, whatever it was, it doesn't matter. 100 Bitcoin in 2010 is 100 Bitcoin today and will be 100 Bitcoin in 100 years' time. The distortion that we see is the purchasing power relative to fiat money, because it's a system that's so hard to break and crack away from. But if the farmer that makes the wheat that goes into creating the flour that makes the base for that pizza, if everyone along that supply chain accepts Bitcoin as a unit of exchange, all of a sudden you get stability in the value of Bitcoin because it's relative to what it can purchase. And we're not tying it back to fiat money anymore. That delinking from conversion to fiat money doesn't happen overnight. And that's the long-term thing that I'm talking about, is that it might take 100 years, it might take 200 years for that to actually come to fruition. And what I'm saying is that what we're seeing now with cryptocurrencies and Bitcoin is that there are short-term opportunities and windows to make money, to make fiat converted money for investors. There is absolutely that opportunity. But I'm also saying is that if people have got a little bit of foresight, if you've got a kid, if you've got a grandkid, if you have any sort of concept about the potential for generational wealth, then you should be starting to think about that with cryptocurrencies today. If you want to see, or if you want the idea of your family to have an opportunity, perhaps, this is some pretty out there thinking, but if you want, third and fourth generations to perhaps be at the front of the curve, then maybe you should be considering these cryptocurrencies as that kind of long-term generational wealth. Yeah, there's plenty of opportunities, and we will talk about a lot of these in the broadcast that we're going to release on Monday afternoon. But short-term, yes, there's opportunities for investors, and short-term in your lifetime and my lifetime, there are going to be heaps of opportunities to build wealth. But the revolution in play is so significant that I'm talking also about generational wealth. And I think people should be taking on board that aspect of it, not just the short-term side of things as well.
Of course, any investments in that kind of space are, there's the crypto space, as I've said often, is the wild west of investing. It is the same as being out on the frontier, and the risk there is very high indeed. I mean, I'm a crypto investor myself. I've owned Bitcoin for many years now, and in fact, I actually, sort of conversely to the generational wealth side, I bought some for my dad's birthday a few years ago. I think it was 2015. I remember. And it was, and he was very interested in seeing the price go up and down as we went through the 2017 just crazy bull market. But of course, it is incredibly risky. If you do want to invest in it at all, I do urge everybody, you should only be investing in it if you are really prepared to stomach all the volatility for that, and be prepared to make a loss. But on the generational side, Sam, I thought there was something quite interesting where we're talking about the Genesis block at the beginning of this conversation. When you think about it, I mean, because the Genesis block, all forks of Bitcoin and Bitcoin itself in general, they all contain the Genesis block, and every block that is mined afterwards, all of the transactions, they still reference all the way back through the blockchain to the Genesis block. And as you say, it had that headline from the times there. I mean, when you think about it, I mean, that thing's going to be around for as long as Bitcoin's around.
Yeah.
So that's the best advertising for the times, like that they've ever gotten, right?
Yeah, I suppose so.
I mean, pay for it or anything.
It's funny. I mean, you could look back at the first, you know how people walk around beaches with metal detectors to find old Roman coins. People will be able to search through, the internet, through the blockchain back to the Genesis block and uncover the Genesis block again in the future, and they'll be like, "What's the times?"
Yeah.
And then they'll jump onto the Wayback Machine and go, "Oh, the Times was a newspaper. What's a newspaper? What broadsheet printing paper? What is this stuff?" They'll look back on it with confusion in the same way that we look back on thousands of years old Roman coins.
It's I remember seeing sort of more recently than Genesis block, maybe I think it was maybe 5 years ago, that in a lot of folks in China were using Bitcoin to keep filtered information, censored information. They were coding it into the blocks, and once the information's in the blockchain, you need to be able to rewind all of the blocks. You need enough processing power to beat every other network, every other node in the Bitcoin network in order to erase that information. So it's almost a way of sort of making, it's a way of making it permanent in a way that you can't otherwise.
And so you bring up a key point with sort of what I was saying, is that it's more than just Bitcoin. It's more than just prices or US dollar prices or prices in pounds. We're talking about a network and a system that you can add data to, you can store and put on the record for eternity, really. Information that can't be changed. And if you can go back and then if you can verify that information to be correct, and you have the networks and systems in place to record this data and this information so accurately, like I say, cryptocurrency networks and the way that blockchains are inherently built and constructed, we can open up this whole new world. We can unlock the key to accurate information and data. We can fight fake news in a way that we couldn't necessarily fight before. And privacy and personal data and who has access to it, big tech and governments, we can lock them off from that, or choose to give them access to it without revealing too much of our other information. There's such a plethora of opportunities within these technologies, and it is a technology revolution at heart. And that's why I get so excited about it. But, the opportunities and potential is boundless. And it is so much more than just Bitcoin and just its price, that when people really get a hook in to what's happening outside of something just like Bitcoin, then they start to really, see the opportunities that are in play.
It's one of the things I find interesting with with people putting Easter eggs effectively into their transactions with Bitcoin, which are then added to the blockchain, is that if anyone wanted to do anything about it, anyone wanted to stop that that transmission of information, the Bitcoin blockchain is consuming the energy equivalent of Chile right now. So you'd need that amount of energy effectively to erase whatever information somebody has decided to put on there. And of course, nobody is prepared to do that. One of the I saw that the carbon footprint of blockchain is now the same as New Zealand, which I find it's pretty incredible just how fast that figure has managed to move up just over the last few years.
Yeah, so interestingly, that actually also then creates another opportunity in energy markets, right? And things like renewable energy, because a lot of miners are now looking to, because they don't want to have to continue to pay for electricity generation and things like that. So they're looking for self-sufficient renewable energies in solar and wind and all those other more effective renewable energy sources, and mining operations are already running solar farms and things like that. So there's, when you start to really dig into what's happening in the space, and things like mining and proof of work mining like Bitcoin, and the energy consumption, and then the flow and effects from that, and then proof of stake, which is another, again, I don't want to get too complex, but where it doesn't have the same sort of energy requirements, but then has a potential payout reward to those that are helping contribute to the network. There's just so much opportunity, so much innovation, so much development happening in the space that you've got to really get in and sink your teeth in to see it. But when you do, it's just a whole new world of excitement that I love. I just can't get enough of it.
Yeah, I can tell, Sam. I'm afraid we have gone on slightly too long. I will end it there. We have enjoyed ourselves quite enough. But thank you very much for listening to this, Sam. Thank you very much for joining me. As ever.
Thank you very much.
And we shall be back next week. As it's a bank holiday tomorrow, I won't be hosting this, but we shall be back on Monday. And of course, as Sam mentioned, he will be hosting an event, a pre-halvening party, you could call it, on Monday. So you can sign up in a link below this podcast. But that sums up everything for today. I hope you're keeping well and in good spirits, and we shall be back again on Monday. Have a good one.